Welcome to the Deep Dive, your compass for navigating the most transformative sectors. And wow, right now, there's probably no place more dynamic, more buzzing with innovation than the crypto market.
Absolutely. It's constantly evolving.
We're talking about a global market cap that, as we record this in September 2025, is hovering around, an absolutely staggering 4 points over trillion dollars.
That's right. 4 trillion. It's a landscape that really demands attention, doesn't it? Full of both established giants and, well, some audacious new players.
It really is. And this valuation, it isn't just a number, it feels like it reflects a real, undeniable shift in global finance.
A maturation, perhaps. It certainly demands a strategic eye from anyone looking to understand where capital is flowing, and where the next wave of innovation might actually emerge.
Exactly. And that brings us to today. Our mission is to peel back the layers on a particularly intriguing new entrant, Aifex, or AFX. We want to go beyond just the headlines here, really dissect its unique vision, its potential, and how it seems to be meticulously positioning itself.
To carve out a distinct, maybe even powerful niche in what is, let's face it, an incredibly competitive market.
Precisely. Consider this your strategic blueprint. We want you to understand not just what AFX is, but why it might represent such a compelling proposition, whether you're new to crypto or a seasoned investor.
Yeah, we're going to explore the strategic architecture behind AFX. We'll look at its foundational strengths, assess its potential, really through the discerning eyes of a seasoned crypto and financial strategist. This deep dive isn't about just listing features. It's about grasping the potential game-changing implications of its approach.
Understanding its potential as a true market differentiator.
Exactly.
Okay, but before we really zoom in on AFX, maybe let's just set the scene, paint the broader canvas. Because to truly grasp the audacity of AFX's vision, we first need to understand the terrain it's actually trying to revolutionize.
The crypto landscape as it stands today. Yeah, that makes sense.
Because despite all the constant evolution, some pillars just remain unshaken, don't they?
Indeed. We definitely still see layer 1 dominance. Coins like Bitcoin, Ethereum, Binance Coins, Solana, they aren't just market leaders, they really are the foundational architecture, Consistently securing the largest market caps, demonstrating enduring utility,
Right.
They set the benchmark.
And the scale is just immense. Bitcoin, the original digital gold, still commanding a staggering market cap, over $2.3 trillion, trading around $114,900.
It's incredible.
And Ethereum, the engine of so much innovation in DeFi and NFTs, well over $543 billion market cap, price around $4,445.
Still the backbone for smart contracts.
Binance Coin, BNB, the fuel for the world's biggest exchange, sitting at $129 billion, around $926 a coin. And Solana, known for its speed, its scalability right there too, $127 billion market cap, priced about $232.
And you've got others too, significant players like XRP around $3.01, Cardano's ADA at $186, even Dogecoin still holding quite strong at 26 cents. What's really crucial to note here, I think, is that these figures aren't just impressive numbers. They represent established trust. They represent massive liquidity, deeply embedded ecosystems. They are the market's anchors.
Which makes any new contender's strategy for differentiation just so vital, doesn't it?
Absolutely critical.
Okay, so that's the coin landscape. Now, when we consider where most of the trading actually happens, centralized exchanges, CEXs, they're still the undisputed heavyweights, right? Processing incredible volumes.
Oh, that's putting it mildly. Binance remains the dominant force. Its 24-hour trading volume, roughly $18.1 billion. It just absolutely dwarfs its newest competitors.
18 billion in 24 hours.
Yeah. And this isn't just about market share. It speaks volumes about the unparalleled liquidity, the user trust, the global infrastructure that these CEXs have built up. These are significant barriers to entry for anyone new coming in.
And just to really hammer that point home, look at the others. Bybit, the next largest, maybe $4.7 billion. Coinbase, $2.6 billion. Upbit, $2.3 billion. OKX, $2.4 billion. Even Bitget, which is a strong contender, around $3.5 billion.
It truly highlights the sheer concentration of capital, of activity on these centralized platforms.
Yeah.
This deep concentration, with Binance leading the pack, it reveals a persistent user preference, doesn't it, for efficiency, for established fiat on-ramps, and maybe the perceived security, the regulatory comfort that centralized platforms seem to offer.
That makes sense.
It's not just a trend, it's a fundamental market reality. Any project aiming for broad adoption really has to contend with that.
That's a really powerful point about the persistent appeal of centralization. Okay, but what about the other side, the decentralized exchanges, the DEXs? For those championing crypto's original sort of self-sovereign ethos, how do they fit into this picture? And maybe more importantly, what's the gap they still leave open?
Well, DEXs certainly have their niche, and they are growing, no doubt. But the strategic gap, it's still quite glaring. You look at the top DEXs, like PancakeSwap V2 on BSC, impressive, hits around $4.07 billion in 24-hour volume. V3 is maybe $2.24 billion.
Okay, still significant numbers.
They are, but compare them. Uniswap V3 on Ethereum sees about $619 million, V2 around $235 million, Curve, also on Ethereum, maybe $186 million.
Right.
So if you connect this back to the bigger picture, the overall DeFi volume, even from these leading DXs, it's still considerably smaller than what just one major CEX like Binance processes.
So that gap, that structural disparity between CX and DX volumes, you see that as a market inefficiency, a place for innovation.
Absolutely. I think this disparity is precisely where the greatest strategic opportunity lies. It's a puzzle. Users often lean towards CXs for liquidity, those easy fiat connections, maybe regulatory comfort, as we said. Well, DXs offer that true self-custody composability, but they can suffer from fragmented liquidity, higher slippage sometimes, maybe a less intuitive user experience for the mainstream user.
Right. So the holy grail
Is
here.
a project that can effectively combine the best of both worlds, leveraging cutting-edge tech, maybe AI, to enhance liquidity, optimize the user experience, seamlessly integrate diverse financial operations. That's the project that could be truly disruptive.
That makes perfect sense. Okay, now let's pivot. To understand AFX's potential disruption, it's always insightful to look back at the paths of the current giants. Each one, in its own way, told a compelling story, solved a fundamental problem, Bitcoin, for example.
Oh, Bitcoin's trajectory is legendary, isn't it? From, what, fractions of a cent? Maybe $0.01, to now trading around $115,000. The growth is just astronomical, over 185 million% according to CoinMarketCap data.
Mind-boggling.
And its narrative was key. Digital gold. It captivated people, offered a decentralized, censorship-resistant store of value totally outside traditional systems. It tapped into something deep, that need for trust, for autonomy in finance.
It really does underscore the power of a clear narrative combined with, fundamental utility. Okay, then Ethereum, the smart contract revolution.
Ethereum followed a different path, but equally impactful. Started around $0.80, now trades near $4,466. That's growth of over 157,000%. Its narrative was crystal clear and revolutionary. The smart contract platform, the brain of the DeFi world, essentially.
Right.
It just enabled this explosion of dApps, decentralized applications, opening up entirely new financial paradigms we hadn't even conceived of before.
And then there's Binance Coin, BNB. Its journey is a fascinating case study in, exchange-driven utility.
Indeed. Launched at around 10 cents, $0.10, now trades at roughly 926 cents. That's impressive growth, too, over 805,000%. And its success is just inextricably linked to its utility as the exchange fuel within that massive Binance ecosystem.
Right.
It powered transactions, gave fee discounts, became central to a thriving global exchange. It proved that a strong ecosystem can drive incredible token value.
So looking at these huge growth stories, Bitcoin, Ethereum, BNB, what's the fundamental lesson here for new projects? Is it just solve a problem, or is there more to it?
I think the fundamental lesson is multifaceted. Monumental growth seems to come not just from solving a problem, but from becoming indispensable.
Indispensable, okay.
Each of these giants fulfilled a foundational role. They addressed a critical, pervasive need or problem, and they were driven by a clear, powerful narrative combined with undeniable utility. They weren't just tokens. They became core solutions that reshaped their corners of the financial world.
That context really sets a high bar, doesn't it?
Yeah.
And provides the perfect framework for evaluating something like AFX.
Exactly.
Which brings us, finally, to Aifeex. AFX. This is where we shift our focus to what some are suggesting could be the next wave. Now, AFX is a nascent project. The price was around, $2, $3 before a recent, quite strategic system reset. But its core vision, its strategic intent, that's what seems really different.
Yeah, AFX aims to be the AI financial fuel. And look, that isn't just a catchy tagline. It signifies a really fundamental operational shift. It's positioning itself as, potentially, the very first coin that uses advanced AI to drive a combined Well, everything. CEX, DeFi, arbitrage, and something they call market link.
Market link.
A direct connection to traditional financial markets. Think HKEX, NASDAQ. This is a significantly broader, more integrated ambition than we've typically seen from exchange tokens.
Okay, let's really unpack that. AFX's unique utility, its differentiation, because this is the crux of its potential disruption, right? It's clearly aiming beyond BNB or Bitget's BGB.
What's truly fascinating here, from a strategic viewpoint, is how comprehensively AFX seems designed to operationalize intelligence. Its utility isn't confined to just one thing. Imagine an AI not just spotting arbitrage, but maybe predicting market shifts across both crypto and traditional stocks, autonomously rebalancing liquidity pools, executing complex multi-leg trades.
Across CEXs, DEXs, even traditional markets.
Potentially, yes, all in milliseconds. This isn't just connecting separate parts. It sounds like an attempt to create a unified, intelligent financial nervous system.
And AFX, the token, is the fuel for that.
Exactly. It acts as the fuel for this AI-powered CEX core, but then its integration extends across. The AI CEX itself, powering core operations with AI efficiency.
Okay.
Arbitrage leveraging AI for hyper-efficient, maybe even proactive trading strategies across markets.
Right.
DeFi trying to bridge that CEX DEX gap by integrating AI-driven DeFi functions, maybe solving for things like fragmented liquidity or high slippage. Its ecosystem powering a potentially broader suite of services and apps that benefit from this integrated intelligence.
And that market link feature you mentioned, connecting crypto to giants like the Hong Kong Exchange and NASDAQ using AI, that sounds incredibly ambitious.
It's a very bold move. It suggests an aim to allow capital and strategies to flow across both paradigms, maybe transcending the usual boundaries we see.
So using AI as the sort of intelligent connective tissue between these usually separate worlds.
Precisely. That could potentially open up entirely new avenues for capital flow, sophisticated hedging, complex trading strategies, setting it apart from almost any other crypto project out there right now. It feels like an unprecedented play to unify global financial markets through AI.
Wow. Okay. Now, let's talk about a specific strategic move they made.
Yeah.
That system reset. This wasn't just a technical update, was it? It felt like a deliberate choice to reshape the value proposition.
Absolutely. That reset looks like a calculated move. It seems to be about creating genuine scarcity and intrinsic value through strategic design, rather than relying on, say, potentially unsustainable growth models.
And how so?
Well, the elimination of those referral and VIP programs is a big signal. It suggests a clear intent for growth to be organic, purely utility-driven, not artificially inflated by network bonuses or MLM-style structures we sometimes see elsewhere.
Okay, focusing on the tech and utility itself.
Right. And then there's the cap on the staking supply, just 30 million AFX.
That's a very tight cap, isn't it? A bold move to create controlled scarcity right from the start, especially for a project with such wide-ranging ambitions.
It is. Now, you could maybe draw a loose parallel to BNB's early strategies in creating scarcity through burns and utility. But AFX seems to be defining a really distinct path here. By emphasizing that its growth will stem directly from its real utility and its AI innovation rather than network bonuses, it strongly differentiates itself. It's a powerful statement of strategic confidence in the core product.
So the bet isn't on quick incentivized adoption. It's fundamentally on the core technology, the disruptive power of that integrated AI.
That looks like the strategic foresight at play, yes. If the adoption of its AI-driven services is successful, then AFX has undeniable potential to represent a distinct next wave in crypto. It would be fundamentally different from Bitcoin, Ethereum, or BNB because of this AI-centric, integrated financial ecosystem approach.
Not just an incremental improvement, perhaps, but a redefinition of utility.
That seems to be the goal. A potential redefinition of utility within crypto, and maybe impacting the broader global financial landscape too.
Okay, this is where it really all comes together then.
Yeah.
Bringing the vision, the potential of AFX into sharp focus. We've recapped how the giants got.
Right, let's synthesize that narrative again,
Yeah.
because it's key to placing AFX. Bitcoin grew because it became digital gold, an indispensable store of value.
Check.
Ethereum grew because it transformed into the brain of DeFi, powering massive innovation.
Got it.
BNB grew because it was the essential fuel of Binance's indispensable utility within a dominant ecosystem.
Right. Makes sense.
And AFX, within this framework, seems strategically poised to be the intelligent energy of an AI CEX financial system, something that Arguably, no one has really executed before in this integrated way.
There's a powerful statement of intent, intelligent energy.
It absolutely is, and it frames AFX as a project with a clear strategic vision. It's directly addressing a significant market opportunity we discussed, the CXX volume gap, which it aims to bridge using AI-driven solutions. It's not just competing, it looks like it's aiming to fundamentally redefine utility.
By integrating those advanced AI capabilities into a comprehensive, perhaps self-optimizing financial ecosystem.
Exactly. That proactive, innovation-first approach, it really fosters a sense of strategic confidence and hints at immense long-term potential for anyone watching closely.
Okay, so to just pull it all together for everyone listening, Aifeex, AFX, presents what seems like a profoundly unique value proposition, an AI-driven financial fuel. Broad utility spanning CEX operations, potentially sophisticated DeFi integration, intelligent arbitrage, and even those unique links to traditional financial markets.
And all underpinned by that strategic scarcity model, prioritizing organic, utility-driven growth over incentives.
And its future vision, as you've laid out, positions it as potentially a distinct next wave, intentionally diverging from previous crypto paradigms because of that foundational reliance on AI innovation and this comprehensive integrated ecosystem idea.
It's a bold play, calculated it seems, but bold, for a future where AI isn't just a feature bolted on, but the core, perhaps self-optimizing engine of financial operations.
Wow. This deep dive has certainly given us, and hopefully you, a lot to strategically consider about AFX. It leaves us with a really provocative thought, doesn't it? As AI continues its relentless transformation of pretty much every industry. What could the profound integration of AI truly unlock for the global financial markets? And how might ambitious, strategically minded projects like AFX actually define that future paradigm?
That's a multi-trillion-dollar question, isn't it?
It certainly is. Something worth pondering long after this deep dive is over.